Hello, my name is Mace Kokenderfer. I am a certified reverse mortgage professional with Colorado Reverse Mortgage. You are watching my video series, Helping You Move Forward in Reverse. You know, I meet a lot of folks, but I always shoot straight with them. I'm always respectful, if not diplomatic. For better or for worse, neither one of us can ignore reality, and it's ultimately on me to tell you what you need to hear. If you shouldn't get a reverse mortgage, or if you're not going to qualify for a reverse mortgage, or if your home is not worth what you think your home is worth. That's on me to let you know as soon as possible. Remember, what you need to hear is not necessarily what you want to hear. So, that said, I enjoyed the bluntness of Derek M's email to me, and I appreciate his ability to cut to the chase. Derek M, Mr. M, he writes to me, Mace, I get salespeople calling me all the time, and they really push my buttons. I know you and other companies sell and twist arms to get people into reverse mortgages. But what I want to know, without you sidestepping me, is what are the negative aspects of the reverse mortgage program? What are the tax consequences? And can I deduct the reverse mortgage interest on my tax returns? Respectfully, Derek M. Now, Mr. M, I got a chuckle, honestly, from your email, and I appreciate your position. I am familiar with some of the sales practices mentioned only because many seniors have shared similar experiences with me. Because I've likely been in the reverse mortgage industry, the reverse mortgage business, for longer than you've been a senior yourself, I suspect, I hope, I've heard more stories and grumbles about this than you've hopefully experienced. At least I hope so. Colorado Reverse Mortgage only practices in Colorado. Other companies' licenses allow them to practice nationally or in multiple states. For the sake of efficiencies, their sales force usually operate out of a bullpen type of environment and focus on closing every single deal quickly with shareholder profitability in mind. The best advice I can give, and I know this is not your question, but we're going to comment about it here for just a moment, but the best advice I can give is if you ever feel like you're being pushed into a reverse mortgage by anybody, and this includes me, okay, do not work with that individual. Do not work with that company. It seems obvious, but if they're more interested in their business interests and successes rather than your best interests and success, then just keep walking, all right? Don't spend any time with them. Keep on walking. Do not enter your contact information online. I suspect that's what you did. If you or anybody enters their information online to get a free booklet or to get some information or find out what numbers are, you're effectively asking them to contact you. Remember the Yellow Pages? Way back when? The Yellow Pages? For many, many years, I ran an advertisement in the Yellow Pages. In total, there were 5 companies that were advertising in the Yellow Pages for reverse mortgages. I was one of them. The other 4, though, were not even reverse mortgage companies or mortgage companies at all, but rather they were data mining companies. Data mining is where they're gathering your information and selling your information to others. It's even worse today with the internet. Many companies offering you to give you information online aren't even mortgage companies. If you wanted to work with them, you couldn't. They're not licensed to do that. They are data mining. All right? They're companies fishing for information. They're companies fishing for leads, and they take these leads and they sell this information, your personal information, to other individuals or companies, oftentimes to multiple individuals. This, of course, is what triggers the onslaught of the phone calls, of email, spam, and the regular U.S. Postal junk mail that comes in on Tuesday afternoons. Now, because some fool paid good money for your contact information, whatever else it is that you shared with them, you can bet that they're going to contact you several times, and they're anxious to contact you and visit with you before the other guy that the information was sold to gets a hold of you. So it's a race to get to you. Now, if you are not interested, then tell them to not call you. Tell them to not mail you anything. I know that they can be a bit pushy, and if you're not comfortable pushing back, tell them a little white lie. Tell them that you already completed your reverse mortgage and that you just had a quick question, but you got it answered already. But let them know that you're not interested in talking to them further, and there's really no need for them to reach out to you or keep hassling you, because from their point of view, you've already got your reverse mortgage in place. But a good tip for you is this is what I tell my own folks, but keep a list of names, of their name, the company's name, the date they called, the phone number that they're calling from, get their return phone call. Because when you tell them to bug off, if they continue to call after you, I suspect that the Attorney General's office will be more than happy to get a hold of your documentation on this. They'll help you out. Now, if you're able to work with a CRMP, that's a Certified Reverse Mortgage Professional in your state, by finding a CRMP in your area, that should give you some comfort as to an individual's professionalism and commitment to the reverse mortgage industry. The CRMPs, they follow a code of ethics and professionalism. A list of CRMPs in your state can be safely found at reversemortgage.org. That's reversemortgage.org. No spaces, just all run together. reversemortgage.org. And you can learn more about the designation and find those of us that have that designation in your state. Now, since I've got no control of others' actions, other companies' actions, and their marketing behaviors, let me actually move on to answer the questions that you posed to me. Your first question was, what are the negative aspects of a reverse mortgage? Now, there may be more, but I'm just going to talk about the most common ones that are familiar to me, or the most common concerns that are shared to me as I visit with the folks that give me a call. The first one I'd like to address is the fact that there's accumulating interest. Some people's concern is that your heirs, or the heirs, more often than not it's the kids, right? But a big concern is that the kids are going to inherit less equity when you die and they inherit the home. This is typically true. This is how reverse mortgages in general work. But please remember that this is your home. It's your home. You're the one that paid for it. It is there for your comfort, not necessarily your kids' comfort after you pass away. There are no monthly mortgage payments required, and the balance of the reverse mortgage typically does get larger and larger over time. Every month, you see, the interest that is owed, the interest that is charged, since a payment is typically not made, the interest is added to the balance, okay, or what's also known as the payoff, the outstanding balance. So the balance gets a little bit bigger each and every month. Now, these features are considered disadvantages by some, advantages by others, because they're not having to make a payment to borrow this money. But the reverse mortgage product can be a huge advantage for those who want to stay in their home and improve their financial health. But do remember this, though. With a reverse mortgage, a mortgage payment is not required. And again, this is what is most attractive to people who start exploring the reverse mortgage product. But I've got several clients who do choose to make an occasional payment. They may be making it on a monthly basis, and other times they just make it when they, well, I've got one client who recently received an inheritance themselves and used that money and made a large payment onto their reverse mortgage balance. But whether the intention is to build equity for their heirs, or the more frequent reason is that they're simply wanting to build up the line of credit. Remember, we've got lines of credit in this reverse mortgage that have got guaranteed growth on it. But whatever the reason for making the payment, they do vary from one individual to the next. But if your number one priority is that you want to leave your home unencumbered to an heir, to your heirs, well, it's simple. Don't apply for a reverse mortgage. That's generally not how it works. You can treat it like that, but I don't really see what the point is. I guess there's always exceptions, but if you want to leave your home free and clear to the kids, don't get a reverse mortgage. But if you are looking to improve the quality of your life, this might be a good solution for you. I'm hoping, however, that if you ask your children, that they're more concerned with the quality of your life today, more so at least than their inheritance tomorrow. Another concern that people share or objection that they have is that reverse mortgages are complicated. Well, they're not really complicated, they're just different. They're different than what you've known for the last 30, 40, 50 years. With most clients, thinking in reverse doesn't come naturally, and part of my job is to retrain your brain. Your loan officer, or whatever loan officer you choose to work with, should be patient and should be able to explain and educate the product to you. In addition to our role as lenders and loan officers, but HECM rules, HECM, Home Equity Conversion Mortgage, it's what FHA calls reverse mortgages, but HECM rules require everybody that applies for a reverse mortgage, they must visit with a reverse mortgage counselor. Now, that's not my job as a loan officer or any company that actually originates. We're not allowed to hold this position as reverse mortgage counselor. They're an unbiased third party. You can meet them either face-to-face if there's one in your area, and more often than not, it's frankly done over the telephone for convenience sake. But usually they defer to the loan officer as to the proper structuring of the loan file. Their primary role, well, they've got a couple primary roles, but their roles are to make sure that you understand the basics of the program. Okay, they'll leave the details to us loan officers, but they want to make sure you understand the basics. You've got to live in the property. You've got to pay your homeowner's insurance, taxes. But they also want to make sure that it's an appropriate solution. Are there other better solutions that they're aware of that they are going to help you explore, or maybe direct you to explore further on your own? And finally, they also want to make sure that nobody's taking advantage of you or anybody in the senior community. Now, the third concern that folks bring up to me is that they're not getting enough money. I get it. You may be frustrated that with a reverse mortgage, it does not give you as much money as your home is worth. Remember, because this mortgage balance can and typically does grow over time, equity must be left in the property to absorb this growing balance. The loan amount you may think of it as the loan amount. We are going to refer it, and again, this is part of our training your brain, but we call it the principal limit. There's new different lingo that we're going to expose you to. But the principal limit is a calculation. It's going to tell you how much money you get. It's based on a couple different factors. It's the appraised value of your home. It is the age of the youngest homeowner, and it is of course the interest rates at the time of application. The principal limit is a formula that all reverse mortgage companies use. It's given to us through the FHA, actually. So every reverse mortgage company uses the same chart, the same formula. Another concern that many folks have, or they're surprised, but not everybody qualifies for the reverse mortgage. Just because you're 62 years old and you own a home with a lot of equity does not mean you're going to qualify. This product is not available to everybody. You must have a significant equity position in your property, or at least additional resources to make up that difference if we're lacking. But additionally, we are also going to consider a person's credit payment history and also their income level when we determine whether or not to extend this loan to a homeowner. There's what we call a financial assessment. Not only are we going to be looking at your income and your credit and your monthly obligations, but it's rather a financial assessment. And we take the proceeds and the benefits of the reverse mortgage into consideration to help boost folks and get them to fit within our little financial assessment box. The final concern, and maybe the most common concern that's brought to me, it's an objection I run into all the time, and 7 out of 10 people actually get this wrong. But the concern is that when they pass, the bank keeps the property. This is a common concern. It is in reality, though, a ghost story that's passed around the campfire. Yes, it is a lot of fun to pick on banks and lenders and even us mortgage loan officers. I guess really all I can say is lucky for me that there's still more lawyer jokes out there than there are loan officer jokes. But in seriousness, yes, it can occur, and the bank can acquire your property. But the same can be said for any type of conventional mortgage as well. You see, with a forward mortgage or a reverse mortgage, if the homeowner commits fraud or doesn't follow the rules, like living in the home, paying property taxes and homeowner's insurance, maintaining the property, these are just a few common ones, or if the bank does not get paid the principal and interest that is actually owed to them upon the loan maturity, the lender has the right to foreclose upon the home. Fortunately, this is the exception and not the rule. But to be sure, with a reverse mortgage, the majority of the time, the properties are indeed passed on to the heirs. So, another question, or the second question that you asked, is what are the tax consequences? I have a simple answer for a simple question. I like these. I don't get enough of them. Since the proceeds from a reverse mortgage are a loan, they are not taxable. It's just that simple. Reverse mortgage proceeds are not taxable. Your last question to me was, can I deduct the interest on my taxes? I'm assuming you meant income taxes. Can I deduct the interest on my income taxes? This is definitely a more complicated answer. So with the understanding that what I'm about to state is accurate, or I believe it to be accurate, I'm still going to ask that you confirm what I say with your CPA. Mortgage interest that is paid to you over the year is generally a tax deduction. With a conventional mortgage, you're being charged interest and you're also making payments each and every month, with part of that payment being principal, of course, and the other part being interest. It's this interest that you're able to deduct. on a conventional mortgage. You see, with a reverse mortgage, interest is being charged and accumulating on a monthly basis. But whether or not you're actually making this payment, of course, as we already discussed, is optional. But since most people in a reverse mortgage are not making payments, there is no interest payment that they can deduct. Interest is being charged, but you've not yet paid it, so there's nothing to deduct. Later, when your estate sells the home, it of course is going to pay off the amount you borrowed and the interest that had accumulated. So your estate, if your estate is responsible for paying taxes, there may be a large tax deduction that they get to claim because of the reverse mortgage interest that had accumulated over who knows however many years. But if you are one of those few that do choose to make payments on a reverse mortgage, then do be aware, though, that before any of your payments are being applied toward that accumulating interest, there's a pecking order as to where that payment that you're making is being applied. It first goes to being applied towards the financed mortgage insurance that got paid to the FHA. Then it goes to the other closing costs. Finally, after the closing costs and mortgage insurance has been satisfied, that is when you start making payments and it's being applied toward interest, and it should be that interest that you're able to deduct from your income tax. Again, I believe what I've shared is accurate. I believe it is 100% correct, but I'm also a smart enough guy to, again, remind you to please verify my comments with your CPA or a tax attorney. Tax codes change over time, as does the interpretations of them. So, Mr. M, ultimately, only you can determine if the advantages outweigh the disadvantages. The main purpose of these videos, of course, is to educate and to be a resource to you and others in the senior community. We all want you to make a decision that is right for you and with which you're comfortable. I will promise you this: if you want more information or would like some specific numbers that I can give you, you've got my contact information. Of course, any details you or anybody else shares with me are always confidential, and I promise that I do not sell your information to my competition or anybody else, and I will do my absolute best to not push your buttons. Thank you again for considering Colorado Reverse Mortgage. I look forward to visiting with you further. Take care.